Okay, I'll be starting the meeting. Welcome to today's market debrief. Okay, so at this moment, the US market is we having some of a consolidation since last week, 14th of October. Is from here we have another down day. This is a big down from on Monday night. Okay, so the US is down roughly about 1.5%, almost 2%. Okay, so yesterday's night was only like a rest day. Okay, so I will be expecting probably more downside. Okay, so why is that so? Is because at this moment not Dow Jones, sorry, this is the DAX, German DAX. It's down, currently supporting by this short-term support at the moment. Okay, so if this is if the Europe side goes negative, then most likely the US might follow suit. Okay, so in the short term wise, right, the US market is a little bit weak at the moment. And on top of that, this is a high, right, the all-time high, and this is a lower high. Okay, so in the short term, right, it might start to consolidate back down, or probably retest this support here at about 3230 like that. Okay, so why is this? Just to show some of the like this Federal Reserve balance sheet. Okay, what we have here is that um, this is when the US Federal Reserve starts to taper off and stop printing money or stop buying bonds in the open market. Okay, but because of the COVID crisis, they started to print money again, and then they buy a lot of bonds. So what happens in the last in the past 6 months, right, is that this is the high. And right now we are reaching the a new high, testing the previous high. Okay, so this is based on October 13th, okay, last week's figure. Okay, so the US, I think they are still will continue to print money because the COVID situation is still quite bad. Okay, you can see this is the US COVID numbers is still on a high side, from their all-time high here. It's trending this way. Okay, so yeah, that's how it looks like. And on top of that, the US dollar still continue to weaken against the Chinese yen. All right. So previously, as mentioned, this is going to be a long-term downtrend, and is continuously trending downwards. Okay. So if you look at a bigger picture, it's already broke this support here. Okay, and in the previous time where they had a trade war, it went to as low as about $6.30, $6.20 something. All right, so there is a possibility that it might trend down this way because China doesn't really print that much, but US is like they have an unlimited QE, so they are just continuously printing money to support the economy, giving money to people to spend, to boost the economy. Okay, so this is what is happening right now in the US situation. So for the DAX, I've mentioned that is currently weak, and the reason for this opening sell down, right? In fact, there is a sell down when it started to open in our Singapore time, roughly about afternoon, about 4 p.m. like that. Okay, so the reason for that is because there are a lot of cases happening in Europe, okay, and Ireland has become the first EU country to reimpose national lockdown. Okay, and I heard from my brother-in-law who stays in London, okay, and says that the Northern England COVID situation is very bad, okay, and the government has just refused to stop the travel restriction or lock down the city until the government is willing to support the city. So the situation there is quite bad, and across Europe, if you can look through the report, Spain, Ireland, Italy, or even Germany, they are also locking down some of the cities. So that's the reason why it's currently weak at the moment in the short term period. Okay, so this one was like a 4 p.m. news or something. Okay, so for the Hang Seng Index, okay, last week I've mentioned that it's likely to do a inverted head and shoulder pattern. Okay, so from last week it already reconsolidate back down, retest the support region, and then came back up and test the resistance again. Okay, so if I were to do a measurement of this head and shoulder pattern, right, the possible likely next level to look at is at this point junction of 26,000 that is coincide with the previous high over here. Okay, so this is a possible, and then this will form a much bigger consolidation pattern. Okay, so right at this moment, this is just a mini inverted head and shoulder pattern. Okay, we just want to see if there is any um, good catalyst sign for it to move up. Okay, so you might say, hey, how come Asia market like seems better or turning up, or even Singapore it looks like turning up, whereas the US, Europe is like getting worse. The main thing is I think the Western countries are they are refusing to impose lockdown because of a lot of human rights issues. People want their freedom. They are not willing to be told to stay at home. Whereas Asian countries, Malaysia, Vietnam, China, Singapore, basically we are quite quiet lah. We listen to our government. We stay at home. We practice safe distancing and all this stuff lah. Okay, and we managed to keep our COVID numbers low. Okay, so there are more news coming out, which is positive. Like last week, I've mentioned about Singapore, Hong Kong, probably going to open up travel to each other's country. Okay, so that is a good sign now for start. And Singapore is also talking about end of the year might start into a um, phase three relaxation of the COVID rules. Okay, so we are looking into most likely a recovery more for the Asian countries. Okay, so this is our Singapore market. Okay, at this moment, you can look here. The past week has been very quiet, just sideways in the tight range. Okay, so I think it's just waiting for news catalysts. So most likely we might have a little bit of sell down, depending on the US market. Okay. Now, I'd like to share an article. Recently read about it. It's called the K-shaped recovery. First time I hear about it. They only started to write about this K-shaped recovery only last month, in September. Meaning to say the K-shaped recovery is that after a recession, only one half of the economy is recovering. Meaning to say your tech companies, okay, like your Apple, online companies, Alibaba, Shopee, and Netflix. People stay at home and watch movie. Those kind of companies, even workers who are able to go remote, work from home. So all these employees, companies that are able to do that are able to recover. Whereas a lot of the brick and mortar shops, retail shops, non-essential, they're selling non-essential items, are facing a very challenging time, and they are getting like bad on the downside. So the K upwards is only for those that are recovering the half of it, whereas the poor and those who are unable to adapt to online or all these changes, right, are getting bad or going downwards. So that forms like a K-shaped recovery for the economy. Okay, so this is what you can Google this, and then read more about it. Okay, so this is what is uh, a lot of the so-called smart people are coining new terms out. Okay, so 2 weeks ago I've mentioned about the commodities that are running. Okay, then because of technical issues, I'm not able to record it. So I'm just going to rerun it again. Commodities sector usually tends to be the last sector to run in a major bull market. Okay, and when it runs, it really runs. So Bitcoin, I would say right now is like a commodity. It's like an online wallet. Okay, so at this moment it's also running. Okay, and we already knew that gold had already run. All the precious metal had ran. Okay, tremendously, and then right now it's basically consolidating, resting for probably a next phase, for fundamentals to catch up or to know basically how bad the inflation has become, and then gold will start to rally again. Same with palladium, platinum, and silver. Okay, so some of the other commodities like sugar. So 2 weeks I mentioned already that sugar already started to form nice pattern going to rally, and then it has already rallied, for the past 2 weeks, 3 weeks. Okay, we look at natural gas. Similarly, also rally. Okay, so this type of rally is just like a beginning of the bull. Okay, because if when they start to rally, right, it's going to rally for months one. So with such case, right, I would say probably for the next 3 to 6 months, there might be this rally happening, for the commodities market. I mean, we look at wheat futures. Wheat similarly is rallying. Even corn. Okay, I used to trade options on all these futures, so I do know about them. Okay, so they are rallying. Okay, so this is what's happening for the whole commodity space. Okay, so you just have to watch out. Probably, I don't know, after the election or during the election, something might happen. Okay, so we are at the earning seasons in the US or globally. Okay, and plus the presidential election coming in a few weeks time for the US one. So we're entering into a very I would say volatile and volatile period. Okay. So for our Singapore market, first thing I noticed today was UOB. All right, so UOB for most of the day has been trading upwards. It was like riding high until the last hour when the European market opened, right? Then it so-called like retraces back. Okay, so but it's a good sign. It's not much volume, no, but the opening volume is really a lot. Okay, so this is the one thing I've noticed. So some have asked me what to buy. Usually I say, I'll buy the banks, OCBC, DBS. Haven't really run uh, compared to UOB. Okay, so this is how DBS looks like. Still like flat. Okay, and this is OCBC Bank. Okay, basically sideways, wanting to run but didn't break out. Okay, so but there are a lot of volume coming in, a lot of traders, shares, trade places over here. Okay, so this is the especially OCBC looks like a nice pattern. Okay, whereas in terms of chart wise, DBS of course has in terms of relative strength is a much stronger bank among the three. Okay, so just to take note, okay, UOB has already run, DBS, OCBC has not moved for based on today. Now for the REITs, last week I mentioned that I'm not sure about the industrial and logistic sector, because they're giving me a lot of mixed signals. Okay, so this is what happens for Ascendus REIT. It's already trend down and so-called make a new low with increased volume. So this in the short-term period isn't that good for this. So most likely we might be seeing more or further downside or retracement in these stocks. Okay, so we just have to monitor and wait for some signs, to that there's some support, volume support coming in, that we can look for a new trend to trade upwards or invest in this. But coming down is a good thing, you can get to buy this stock, a good quality REIT at a cheaper price. Okay, so currently the yield is about 3.37%. Now compare this to Maple Lock. Okay, Maple Lock has some news. Okay, these are all being driven because they did a so-called private placement and a preferential offering. They are issuing new shares to so-called buy over the remaining equity interest in their properties in where China, Malaysia, Vietnam, near these three countries. Okay, so they are raising like 650 million to purchase the rest from their sponsor. Okay, so those who have these shares, you are entitled to this preferential offering. Okay, so you can watch out for your mail and then reply for this. Okay, so Maple Industrial is the one that followed with so mainly it's an industrial REIT, not the logistic REIT. There is kind of like short-term weakness happening. Okay, so you can look into this two when it finishes retracement or consolidation. So this one is also running about 3.74%, similar to Ascendas REIT. Wait, someone asked me a question during the week. How come Capital Mall Trust share price went down after the merger? Okay, I only have one reason for this sell down. Okay, mainly because it is mainly because the funds, most of the funds, right, have a share mandate of not investing more than 10% in a particular stock, in one stock. So when Capital Mall and Capital Commercial Trust were to merge, the funds will have more than 10%. They are probably going to have like 15 or 16% in Capital Mall. Okay, so what they'll have to do is to sell their holdings so that their holdings in aggregate will be less than 10% after the merger. So therefore this on the 16th, right, you saw a lot of selling happening. Okay, now subsequently, Capital DC REIT at this high volume, people buying up Capital DC REIT. Okay, the main reason is because Capital DC REIT replaces Capital Commercial Trust in the STI index. Okay, so therefore there are all these funds they are trading, or reallocating, rebalancing their portfolio because of this merger between Capital Mall and Capital Commercial Trust. So that's the reason why the price of Cap Mall went down. Okay, so nonetheless, after the merger, we should be seeing a more precise or actual price movement from Capital Mall. Okay, so Cap Mall also came out with, Capital Commercial Trust came out with their results. Okay, so we can take a look at that. Seems not bad, due to COVID reasons. Their change in so-called net property income, they didn't decrease that much, 6.3%. All right, so you're still having your distribution per unit about 5.34 cents or something. Okay, this is year to date, so you will be having a 2 cents distribution for the quarter. Now we have this EC World REIT has a kind of like lots of interest happening these 2 days. Okay, and then today it starts to inch up, forming a nice consolidation type pattern. Okay, but do note that they previously had this down whereby their CFO was arrested for so-called insider trading or price manipulation. Okay, so therefore this thing happened. Okay, so EC Worried mainly they have logistics in Hangzhou, servicing mostly a lot of those Alibaba warehousing and shipping distribution. Okay, so the warehouse there are doing business associated with online shops. Capital Retail Trust, previously mentioned about this over here, trading in a tight range, and then it rallied because of a expanded investment opportunities in their mandate, in their REITs mandate. Okay, so after this test of 200-day moving average is consolidating. low volume. It's a good sign. All right. So most likely you have to look at if you are a trader, you want to buy above this breakout 131. If you are investors, of course, you want to accumulate, as low price as possible. So any down days, right, you can use opportunity to accumulate the shares. Okay, the tech sector, just an update. Last week I mentioned about AEM. About this is likely going to trade downwards. Okay, this is like the target area. Okay, so today we had a sell down. Okay, so most likely we have to wait until we hit about 320 area. Sorry, from here. Okay, roughly about 320. It might be a good price then to buy into this. Okay, so but do bear in mind the so-called AEM service the Intel. Where's the video? Okay, you can look up at this Ryzen Zen 3 or third gen. Okay, it's just released. I don't know. You can just Google about this Ryzen. Okay, AMD recently introduced a new chip going to be launched next month. Okay, and from what I see from all the reviews in YouTube and all that, it is Intel is not going to win them in the short term. Okay, Intel doesn't have much of a so-called game plan to fight against AMD, this new Ryzen chip. So therefore, I might think that the so-called revenue for AEM right might drop because of that, because AEM only have one customer, which is Intel. Okay, and with AMD making a very strong product showing last month, I think this might affect AEM overall. So therefore, I think people are like selling off this AEM shares. Okay, so there's this short-term weakness until we can find until Intel's engineers can come up with a chip that can rival with AMD. Okay, so this is the news regarding this, the background. Okay, so venture, I've talked about this previously. So it's already broke off above, and then it's been trading sideways, holding above this support. Okay, so this is quite a good sign. So probably can look at a break of above this 2110, 2115 like that. Okay, so it attempt to break today, but because of the 4 p.m. sell down, it also retraces back. There is this news regarding property prices. Okay, property prices in Singapore have been rebounded 0.3% quarter on quarter. Okay, in the second quarter of 2020, and I also did show that Singapore third quarter GDP had improved, or um, uh, so-called grow, compared to the second quarter. Okay, so with this, like, is showing our economy is so-called recovering. Okay, so if we talk about property prices, we talk about property developers. Okay, so first up, I want to share one is the city development, which in today's chat, I've talked about this CDL director, Quek Ling Pek Quick's after clash with the board and management is regards to CDL Hospitality, the management of some of the hotels and some of their so-called private, this sincere property group. Okay, so it's mainly with these two. Okay, so he has abruptly left the company. Okay, so therefore CDL price so-called tank today. Okay, it actually rebounded up to 740, but because of the last hour sell down, right, everybody just sell, take profit, and go back down. Okay, so there might be further weakness. Okay, if we were to draw this as a channel, then there's a possibility that it might hit like $6.70, in the next few days, if people are continuing to be negative with this Quedling Peak's resignation. Okay, so those who like property market, you can look into this, our local property developer. The other one, but that I'm more interested in is, okay, so this is Hong Kong land. So what it has done is that this base right of $3.60 has been holding up pretty well. Okay, testing one time, two times, three times, four times. Okay, so currently it is doing like it's resting sideways. So the main thing is we'll want to see if you can break above somewhere this 385 to 390 area. Break above and then continue its upwards move. Okay, and hopefully eventually break. But if we look at some of the other property developers like Hobby Land, okay, Hobby Land has already moved off, break off, continue to trade upwards, also called like recover. Okay, if we look at Wing Tai, okay, it's already tested its 200-day moving average. Okay, it's trying to recover. You can look at Coco Land. They are now building a new development at Bugis Junction, just behind Bugis Junction. Okay, so there's some interest in that. Looking at this, okay, so it's recovering. So overall, I would say, yeah, probably, the property markets has certain demand. Okay, looking at a lot of transactions happening in the past 1 month, September, mainly in September, a lot of transaction is happening then. Okay, so yeah, I also heard from my property agent is like the property market is quite hot, especially valuation like 2.5 million and below. A lot of demands for those properties. Yeah, someone asked me about medtech today. Okay, last week I've mentioned about this. Because of this sell down, I would say it's weak. Okay, you can avoid about this unless it's trading above here, but it's not trading above here, it's trading below. Okay, so it's continued to be weak, and today there's an increased volume sell down, so most likely it's going to retest. I would say retest this $1 support area again. So if you want, you can just wait for it to retest, and then we see how it turns out there before you make a decision to buy again. Okay, so yeah, probably, considering how the US and Europe countries are having their like so-called second or third, fourth wave of virus. Okay, Riverstone, similarly, I already said it's going to be consolidation in the big area. Okay, today we have a sell down. Similarly with Top Glove. All right, retest is all-time high, and then it starts to have a sell down again. So most likely it's going to come down and trade around within this range. Okay, 220 to $3 area is a big range. It's also that's all I have for the Singapore market. The Hong Kong market is still the same. Mainly, we have our BYD company, still strong or going strong. Okay, and our banks, the Chinese banks that are listed in Hong Kong. Okay, like ICBC, BOC, ABC, CCB. These are the one that are rallying. Okay, whereas the Hong Kong bank itself, like Hang Seng Bank, HSBC, are still languishing. Okay, so this is ICBC. That's the rally for the past week. I've talked about this rally. Now this another week of rally, and Bank of China similarly, and then we have our ABC. Okay, so this is what happened in Hong Kong. Whereas the tech sector is still strong. Like this JD.com. Okay, and your Alibaba, still trending upwards. Okay, so that's all I have for today. Do you guys have any questions like to ask?
Also, can advise on UG or not?
UG Healthcare. Okay, UG Healthcare has a big sell down today. So I think it is more like similar, sector-wide sell down with MedTech, UG Healthcare, Top Glove, Riverstone. Okay, so I mean, if you look at UG, right, UG had a so-called what you call share split. Share split. So therefore they changed the symbol and I can only see this much. Okay, but looking at this tail right that I think last week I mentioned about this is not a good sign. Most likely going to pull back. So I mean what do you really actually want to ask from about this UG healthcare?
Um, this kind of sell down, would it rebound? Because today is the volume quite heavy, right?
Okay, you see comparing
Like
this
next day rebound kind of thing.
I would say unlikely. Okay, why I say so is because if you look at this volume, right, this volume is quite high over here, whereas this is half the volume of this day, this up day. Meaning to say, right, there isn't any buyers coming in, All right, so let's see actually where are the buyers are. Okay, in fact, most of the buyers are here. Okay, in the $1 area. Okay, let's break it down further. Okay, so most of the buyers are here, 98 cents, 96 cents. They continue to sell down, 96 to 94, 94 to 93. Okay, so the buyers are, let's say if it's the same buyers coming in, their average price roughly about 96 cents. And there isn't any more buyers coming in to support really. You know, so I don't think next day will rebound so fast. It probably maybe another day, 2 days.
Okay. But you also follow the sector, right?
Yeah, you follow the sector, correct. So if you look at like just now I show you MedTech, Riverstone and all that, there's a chance of a second day sell down or second day pullback.
Okay. Okay.
Okay? Yeah.
Cool. Thanks.
HPH Trust. Okay, HPH Trust, I think previously I talked about this tight range and then it continued to rally. This is a very nice rally. And then thereafter it did a consolidation. Okay, I mentioned this is like a euphoric run, big volume, euphoric run, and thereafter it's going to consolidate. So I think I've also mentioned that this consolidation will definitely take more than a month. All right, so if now it's probably 3 weeks already, most likely it's going to take another 2 weeks or 3 weeks. So at this moment, what I can see is that the volume has thinned, interest has thinned, and this might likely become the support price. I would say 135 to 138 in region. Okay, so a nice consolidation, I would say, will if it can stay 3 weeks on, all the way until November first week, second week, you can trade around this range, or between this 135 to 145. So you can trade within this range. It holds this support. Most likely you might see a second wave or second run. Okay, so yeah, that's for HPH Trust. Okay, so at this moment, I think you can still wait and see how this one turns out.